Hey there, welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at what makes them do what they do. I'm Pete Townsend, and this is episode 43, which is the first of two special episodes recorded live at the recent Dublin Tech Summit 2019. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialists, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, we highly recommend you have a chat with the team at Top Tier Recruitment as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. First up is my co-host Owen Fitzgerald in a fireside chat with Dan Calvert, the head of partnerships at Challenger Bank N26. Before N26, Dan spent time with Uber Eats, Google, and Adidas, so he's a friend of big brands. Anyway, away we go with episode 43 of Money Never Sleeps.
Nice big stage for us.
Exactly.
Dan, it's a pleasure to have you here. I know we only just met briefly, but I'm a big fan of N26. I've been following them for a couple of years. I have an account. I do also have a Revolut one, but that's beside the point. Actually, before we even get started, a quick show of hands from the audience. Who has an account with either N26 or a Challenger Bank? There we go. That's great to see, because I think recent numbers are at around between 100,000 200,000 Irish customers?
Yeah, it's in that range, exactly.
Great. So look, why don't we kick off by giving us a bit of background on what you do with N26?
Exactly, yeah, sure. So my name's Dan Calvert. I head up partnerships. So I'm effectively responsible for all consumer-facing third-party relationships that we have at N26, broadly from marketing to product.
And I suppose, how long have you been with the company, and what's your kind of background prior to that?
So my background is very much in media and tech. So I've been with N26 now for about 10 months. Feels like 10 years. And previously I was with Uber prior to this, launching Uber Eats throughout EMEA. And then prior to that at Google and Adidas.
And I suppose you're covering, is it 18 countries now as part of your role? Or?
We're up to 24, aiming to hit about kind of 26, 27 by the end of the year.
And I mean, it's fair. It's under the radar to a degree, I suppose. A lot of it is, you see a lot of stuff on social media, and it's building a customer base. You know, it's not your traditional, let's open a branch and expand from there and get a few clients on the ground. It's very much, you're probably rolling out countries at the same time, I'd imagine.
Yeah, so a big part of the business now is building this competency of what is launch and expansion. So it's about building up the ability to expand at scale. And to build on a very centralized model. So global expansion is a big part of the business, really.
And what attracted you to the role?
A big, long discussion with Valentin. Very much about kind of the mission statement. We talk about building a bank the world loves to use. And we spent, I think, of the 45 minutes, about half an hour talking about love.
That's great. So look, we were chatting at the back around kind of the future of banking. My background is banking. I've been in Barclays and Deutsche Bank. I'm an investor for Enterprise Ireland in fintech startups. How have you seen the evolution of the space in the last couple of years, and where do you see it going in the next couple of years?
So I think when we look at banking in the past, I mean, traditional retail banking is typified by a horrible design and user experience, especially when it comes to the app and the digital aspect of it. And I think what we're seeing now is that it's been falling behind in the disruption. If you look at other industries, we've seen Uber, we've seen Spotify, we've seen Airbnb all come into places that are slightly less regulated and find real ability to disrupt. And I think what we're doing is we're trying to just bring it into banking. User expectations are already there, and we're just playing catch up right now. And that's the real opportunity.
And I mean, there's obviously, it's becoming a relatively crowded market. There's a lot of opportunity there. It seems to be a race to who can get the most customers, with a view to then, okay, similar to the Uber models or the tech player models, it's let's build a customer base and then add products to it or sell them additional products sort of thing.
Yeah, I think that there's two sides to it. I think inherently the business model is built very differently to traditional banks. A traditional bank will look to maximize the revenue per customer. Which means pushing fees, pushing high-ticket items. We tend to flip it. We're looking to minimize that cost per customer, which means that we can provide a better product to a larger audience, which means we benefit from economies of scale. In terms of kind of the growth rate, we're always proud of our growth rate. We're adding 10,000 customers a day.
Wow.
And where I come from in Scotland, that's a big number. But I think the big priority we look at when we look at these numbers, it's not the top line number, it's about the quality of that customer. We're looking to build sustainably, and that means taking time to build relationships, to build trust with our customers.
And that to me is the big challenge, because I suppose, it's all well and good building a customer base, but what the banks have, and maybe they've lost over the last couple of years, is that element of trust. But at the same time, you'll do more with your local bank partly because you're used to. I think I saw some stats last year for the UK where you're more likely to get divorced than change a bank account. I think the average marriage lasts 12 years, where the average bank account is 17 years. So it's how do the challenger banks then build that trust, on the basis you're a digital bank?
Yeah. So if you think about your traditional bank and how often you might actually visit it, you're maybe talking about on a real needs basis. So I think the leading research that we looked at when N26 was launched was that 7 out of every 10 millennials would rather go to a dentist than go to their bank, which is it's a very resounding statement. So that meant that when we looked at it, we looked at how do we actually build a relationship. So by being digital, yes, it means we're constrained and we can't have a physical relationship with our customers, but it opens up so many more opportunities. A customer can have a daily interaction through the app. A customer can have daily chats, daily emails, daily phone calls with our customer support center. Our average response time is 30 seconds. If you compare that to a traditional model where you set an appointment, you go to your bank, and it's a 3 to 4 hour process, and it's on a fixed timescale, I think there's an opportunity to use technology to really change and redefine what that relationship looks like.
And is that it? Is it a consumer behavior piece? Because you see research in the UK around 60% of customers in the UK for the traditional banks don't even use their mobile app, but they're probably in the older age range. Is the play more towards a younger generation who are born on the internet, where they're used to just using their smartphones for everything?
I think the opportunity lies across a broad range of demographics. Naturally, we err towards the penetrated smartphone audience because you need to have a smartphone to have an N26 account. But at the same time, it's about being inclusive. So I think it's about being available and having a product that caters to a broad range of needs. And above all, it's about being empathetic and patient. For some people, trust in a new bank account is garnished within 1 or 2 days. The early tech adopter, as they're labeled. For other people, it might take a year. It might take 2 or 3 years. I think as a business, we're very empathetic to this. We're always listening to our customers. And that's what really drives our design and our product. It's about listening to the customer demand and the voice of the audience.
And I suppose it probably, given your background, you've come from that space whereby it's building that interaction with customers and loyalty with customers from Uber and Google and the likes. Do you see that more and more now in the financial services space, that it used to be I'm a banker and we work with bankers, but now it's bringing that kind of big tech mindset into it?
I think definitely. I think where I see the real contrast though is that the opportunity is so much more significant. Finances is something that's central to everyone's life. Whether you even have a bank account or not, everyone interacts with a currency. It's integral to all ranges of society, all levels. It's really indiscriminate, which means that the opportunity is so much larger. At the same time, it's an industry that's been neglected when it comes to tech adoption, when it comes to innovation. And that's driven by different aspects. Part of that's driven by a need to protect that customer so that we're not moving too fast. But at the same time, part of that's come from fear. I think there's been a fear and a lack of boldness in moving into this space. I think that's something that we've kind of taken head on. We're not afraid to be big and bold because we know that in the long run, that benefits our customers.
And where do you strike the balance then? Because obviously there's been a lot of reports in the press recently about other companies in this space, from a regulatory point of view, whatever about other industries, maybe like in Uber's case, where it's somewhat an unregulated space, allowed them to go out there and build fast and break things, whatever the saying is. It's harder to do in banking, or has the regulation just not come to the kind of challenger space yet in the same way that there's been a long history of regulators looking at banks and the regulation applied to it?
Regulation in banking, like you say, it's inherently different because there is a standard regulation that is applied across every country. And that relationship is very different with a regulator if you compare it to partially regulated businesses like the taxi industry and Uber, or non-regulated industries such as something like an Airbnb. I think with banking, what's really required is a healthy dialogue. I think that's how we've really worked to kind of preempt any of these issues, preempt any issues that do arise by having a good, healthy dialogue with the regulator. I think as much as the customer is a person and we recognize that, the regulator is also just a person. It's a person that we need to get to know. It's a person that we need to have a dialogue with. It's a person that sometimes we need to help understand what we're doing differently, why it's different and why it's actually good for the customer. I think if we can build that common understanding and we can be empathetic towards the regulator and we can receive the same treatment, I think therefore if they really believe that we have true positive intent, that's a strong foundation for tackling any issues.
And you're right. I think it is the dialogue. I came from an event this morning with a customer who I work with, and they provide an onboarding solution. Mm-hmm. And they were saying that their view on the regulation side of it is that actually, there's a lot of documentation, but sometimes it usually boils down to one or two key questions. And actually, it's being able to feed that back to the regulator to say, well, all of that documentation you're going through, I'm addressing your key points. Yeah. But again, that comes from the regulation. And I mean, you couldn't have picked a more regulated market, I suppose, in Germany to start off with. But I suppose it stands to you then as you've moved across jurisdictions. Yeah.
So I mean, I think our relationship with the BaFin in Germany, the local regulators, is very strong. I think you're right. That's a testament. We are very much a global bank, but there is this underlying aspect of we're made in Germany. And that brings with it a certain credibility in terms of technology, but also in terms of the standards that we set for ourselves, where our standards aren't set by the rule of the law, they're set by standards that we feel comfortable with. And generally that means always meeting the law or going above and beyond it.
Let's talk about your role a bit more then. I mean, you probably, given that you're traveling a lot and you're in all these countries, you probably have a good view on the wider fintech space. I'm sure everyone wants to be a partner to N26. What's your take on, or I suppose, how do you see it as because typically in the banking world you would see it as a vendor. I provide a service to a bank. I presume the role from a partnership point of view is a very different kind of approach to it.
Yeah, so my role really within partnerships, it's very much about finding these synergies. So we excludes all kind of these vendor and these service-based relationships. And generally what we're looking to do is we're looking to firstly really just find businesses that share a common belief, a common value set, a common ethos, a common principle. I think that's really always the starting point. When we find that in a business, when we find a business that wants customers to love them, wants to have that close-knit relationship with their customer, generally it makes life easier when we're exploring future potentials. I think from there it's about kind of matching up the markets, the size, the product, the opportunities. And I think there's a really exciting movement going on in Europe. I think we're seeing so many different hubs, so many different areas of innovation, so many companies taking advantage of a lot of the trends and opportunities that are coming up in fintech. And it's great to encourage these.
And where then, given what you get to see, I suppose, and the growth path the company is on, where do you see the wider sector going in the next 3 to 5 years?
I think right now, if you look at fintech's still incredibly broadly defined. And I think for me, there's a differentiation between the mass, large fintech for everyone players. N26 is going to be a bank for the world. It's going to be a bank that's going to be available in the future for 5, 6, 7 billion people. We're going to be in all the markets. We're going to be everywhere. I think really when I talk to the different fintech startups, it's about recognizing as a startup, as a business, what is really your purpose. Not every business can have a purpose to serve everyone. And that would undermine a lot of the purposes and missions that they do hold. I think realistically what we'll start to see is we'll start to see more and more specialism. And I think with the specialism, there'll be opportunities in marketplace models or hubs and fintechs to offer your products and your services not just direct to consumers, but through the larger, more mass consumer fintech players. So I think we'll start to see different categories of fintechs, and it'll be a bit clearer, and there'll be a lot more kind of connections between different parties there.
Because it seems to be a lot of the announcements are, at the moment, from a banking point of view, is those partnerships, and it's recognizing that a legacy bank maybe just cannot build this solution. So we will potentially give up, some of our customer base or market share by being able to provide access to these solutions through partnerships with yourselves or others. Do you see that the competitors of the present and the next couple of years being the bigger tech players, like with Apple Card's announcement recently? Do you think they'll be your bigger kind of challenge in the next couple of years than maybe a traditional bank?
I would still say our main competition is the traditional bank. If we take the UK as arguably one of the most competitive fintech markets, still 80% of the retail banking population sits with 4 banks. And they're all very large traditional retail banks. So I think the opportunity for fintechs and for emerging businesses isn't to go after the same early tech adopter, the person that has that early trust. It's really to prove their model by going after the customer that takes time, the customer that is loyal today, but could have a better service. I think that will take time, but I think that's where the bigger opportunity is. I don't think there's a need to overly compete within the fintech space itself.
And do you see then, because talking about building that kind of loyal customer base, obviously there's elements of the banking space that the likes of Apple and Amazon can get into then just by offering a product to their existing customers. A lot of the reports in the press, especially around the Apple announcement, were that this is the death now of challenger banks. I'd be interested to understand your kind of take on that.
So if we take Apple as the perfect example, I think what stands out for N26 is N26 is built upon a few kind of key foundations. It's built upon the user design and obsession with customer-centric solutions. But it's also built upon this fundamental banking license. And this banking license is what allows us to provide the full suite of products that a customer needs to coordinate and organize their financial life. What we see when we look at these large tech businesses is that there is an opportunity for them to move into the financial service sector, but the question would always be, are they going to be a bank of the future? Because effectively by going into the space and pursuing a banking license, you're exposing your whole existing business to the same regulation, to the same scrutiny. And I think there generally be a tendency there, because these are businesses that are public, they have shareholders, and there's probably more of a risk aversion to exposing yourself to being a bank.
Yeah.
I think we see more of an opportunity working with these parties. I don't think their products that they bring out are necessarily directly competitive. We're very much focused on the debit card and the current account right now. And that's where actually Apple to us is one of our flagship partners. We partner with them in voice and face recognition. We're a leading launch partner with Apple Pay, and we have a great relationship with them.
Great. And where, I suppose, is the opportunity then in the kind of the unbanked space? Because obviously, there's a large part of the world, I suppose, and some of the third world countries whereby it's entirely mobile based, but they don't have access to bank accounts. They can't set up a bank account in the same regulated way. How do you see that, or even potentially looking at addressing that need in the market?
I think it is a very important topic. It's something that sits very close to my heart. It's something I've spoken a lot about with the founders. I think realistically, if we want to be a bank that the world loves to use, it means doing the right thing. It means doing the right thing by the world, by everyone, and that includes the unbanked. There's a large segment, and I think it's something that's not spoken of enough. There's not a large awareness of the unbanked population and how significant it is even in developed Western countries. There's a few trends that I would say have to run in parallel in order to really make a significant change there. I think what we're bringing a bank account that's free first and foremostly. So our basic account is free, and it should and will always be. It's a bank account that serves the daily needs of anyone that has a smartphone. I think that's the first thing that's needed, is really just removing fees, making something accessible and easy to use. What happens in parallel is we see large tech companies pursuing projects such as Google's Next Billion, where they're trying to bring the next billion people online, trying to equip them with internet access, trying to equip them with smartphones. And I think in parallel, as hardware, as internet, and as free banking solutions grow together, naturally this is a segment that we'll all address together. I don't think it's something that any one business can change. It's something that, almost as a common good, the tech industries need to come together to provide a solution for.
No, I completely agree, because I suppose the challenge is that it's not, it can be very low payments. Like we work with a company who do microloans in Kenya, and they're €2 loans or €2 loan equivalents. It's not a traditional, from a banking point of view, it's not something you're necessarily going to make money on. But then the other side of it is around the identity. So I have a client, they're a blockchain company that works with government agencies around providing transparency on aid donation. But a lot of the time, the end customer or the end recipient of the aid doesn't have an identity. They don't have a passport. They don't have their utility bills to be able to demonstrate. So it's how do you marry the two, the requirement to be regulated as a bank and be able to identify customers under different regulations, but then meet the needs of people who may not have some of those basic requirements anyway.
Yeah, and I think it comes back to almost to kind of that idea of, you touch on it, it's not necessarily an attractive customer for a business that's looking to monetize. It's not a customer that's going to drive high revenue. Potentially it could almost be a loss-leading customer on the individual basis, but that's not a bad thing. I think as long as we're a business that has a mission statement that we believe in, it's not just plastered on the wall, I think we'll be driven to do the right thing. And that means providing solutions for everyone. And as long as we're inclusive, I think ultimately it makes a statement about who we are as a business. It's something that I think resonates with our customers. We recognize that in the financial service industry, a lot of decisions are often still incentivized and incentive-based. We're focusing more on making statements, on taking positions. And I think that's where we're building that empathy, we're building a relationship that's more less carrot and stick, but more about understanding our customers and empathizing with them.
And I think the reality is that the more you can offer your customers, even if you're not making all the money on it, and you mentioned it there in terms of serving the unbanked world, no one person has a solution to it. It'll require a whole lot of the right people doing that as their mission and potentially making a loss on it, but it serves the greater good. And it comes back then to, I suppose, your partnership approach that it's about being able to provide all of the services to be that bank that everyone loves to use, even if they may not be your products, you're giving them access to everything, whether it necessarily is the most valuable of relationships in that sense. Where, I suppose, do you see your role now? Kind of, it's 10 months. I mean, like you said, it's probably felt like 10 years. How do you see it kind of evolving over the next 12 months as you build out into more countries, but then also as you maybe build out the product line or the partnerships with other players?
I think right now, if I look at the first 10 months, we've been very driven and directed very much by the business strategy. And part of that has been setting ourselves up for success in terms of growth, in terms of in various investment rounds that we've gone through. I think moving forward, we're looking to really mature the business. So that means hiring the right people, putting the right people in place within the business and empowering them to really own a topic. Partnerships is so broad that we want to specialize, and that means building teams that can focus on things that aren't naturally prioritized. So if we talk about cause, if we talk about philanthropy, if we talk about CSR, we can put labels on it. But it's not something that naturally a business is going to be driven to do. If we look at top line KPIs and dashboards, but it's something that you need to devote time to. I think that's something that the partnership's vision at N26 has. We want to build teams that focus on these topics, as well as teams that focus on growth, teams that focus on awareness, teams that focus on customer satisfaction and engagement.
Well, we're just about out of time, actually. I mean, it's an incredibly ambitious plan to be the bank that everyone loves to use, but at the same time, I mean, clearly the opportunity is there and people are buying into it and buying into the mission. And I mean, it's been fantastic to watch, given I've come from the banking world. It's fantastic to see the kind of evolvement of the sector and to see what's going to happen over the next 5 years. And, do we get to a space whereby it's just a cardless future? Maybe, and maybe everything is smartphone led and I don't ever have to use my card, and or the next card, or the cards I have now don't even have numbers on them anymore. I don't know how that's going to work. But I just want to say thank you for your time. As always, it's fascinating to learn, and we'll watch how things go over the next 10 months to 5 years.
Great stuff. Right. Thanks, everyone.
Thanks very much.
Cheers.
That wraps it up, folks. Thanks to the team at Dublin Tech Summit for letting us piggyback off the sound desk and record the chat with Dan Calvert from Challenger Bank N26 and my co-host Owen Fitzgerald. To learn more about Dan, you can follow him on Twitter at DBCalvert. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, get in touch with the team at Top Tier Recruitment as they really know their stuff. You can find them at toptierrecruitment.com. If you like what you heard today, please subscribe to Money Never Sleeps on iTunes and leave us a 5-star review. You can also subscribe via our website to channels like Spotify and Stitcher. So just go to the subscriber page on moneyneversleeps.ie and follow the links. If you're searching directly on iTunes or Spotify, Money Never Sleeps is spelled as all one word. For more info and links, check out the show notes on moneyneversleeps.ie. You could drop us a line on info@moneyneversleeps.ie or at MNS Show on Twitter. As for me, I increase the odds of startup success. DM me on Twitter at Pete Townsend NV if you want to know more. And you can follow Owen on Twitter at Owen Fitzgerald9. Finally, thanks to Conan Brophy from Create Sound for editing this podcast. Till next time, thanks for listening. See ya.